What's up everyone, welcome back to another video with the Millennial Finance. It's been a while since we did our last StashAway video. Most people at this moment seem to be more interested in their money market fund product, which is StashAway Simple. They recently announced that the rates for StashAway Simple is going to go up to 4.1% per annum, which is the highest in the market that I know of. But today, I'll be talking about their investing side and more specifically, their flexible portfolios. Let's get started. Cha-ching! If you want to sign up for StashAway, to use StashAway Invest or Simple, then use our link down below. You will get a management fee waiver for up to 6 months and you'll be supporting the channel as well. Anyway, what is flexible portfolios? StashAway launched this product in the middle of 2022 and I haven't actually used it until very recently, which is why I decided to make this video. Essentially, it is as its name implies. Flexible portfolios allows you to pick and choose between a range of asset classes and ETFs, decide how much you want to put into each and every one of the ETFs that you selected, and you can change it up however or whenever you want. This is in contrast to StashAway's other investing portfolios like their general investment portfolios, their thematic portfolios, their clean energy portfolios. Those are all determined and managed by StashAway or other fund managers, whereas with flexible portfolios, you are kind of like your own fund manager. This is for those of you who maybe aren't so keen on StashAway's robo-advisor aspect. Personally, I'm still invested in those portfolios and the BlackRock one, but I've tweaked my DCAs so that now, every month when I deposit money into StashAway, the majority of it goes to my brand new flexible portfolio. According to StashAway, there are over 55 different asset classes that you can pick from to craft your own portfolio. They have the safer stuff like government bonds, commodities, corporate bonds, and treasury bills. But if you guys have watched this for a while already, then you would know that I completely ignored this portion when building my own portfolio because I'm more of a risk-on kind of guy. So mine is mainly comprised of equities, where StashAway has broken it down into stuff like global, healthcare, tech, and US equities. For those of you who want exposure to real estate, StashAway also have two different choices for REITs, which are essentially real estate ETFs, where you can choose between a US one or a global one excluding US. I'm not such a huge fan. Honestly, I don't know much about real estate, so I will be avoiding that one. So there are a bunch of choices for us to pick and choose from, and it's of course up to you how you want to decide to build your own portfolio if you decide to go this route. If you don't have any experience or knowledge on portfolio management, then I would highly recommend that you at least do some minimal research and due diligence before going ahead with this. Otherwise, it's probably better to go with one of StashAway's pre-built portfolios because at least there, you know what you're getting yourself into. So, why would you use StashAway's flexible portfolio? Since we're essentially managing our own portfolio like I was mentioning earlier, we could technically just do it with brokers like Interactive Brokers or Rakuten. However, there are some benefits to using StashAway. In fact, I do have my own brokerage accounts with both Rakuten and IBKR, but I still created my own StashAway flexible portfolio. The number one benefit that I see with regards to using this product is that it is just so much easier to DCA and diversify. For example, when I created my own flexible portfolio, I selected 8 different ETFs and I have a monthly deposit of 300 ringgit set up to go on continuously. On average, 300 ringgit split into 8 ETFs is around 37.5 ringgit per ETF or around USD 8.5. Those of you who have your own brokerage accounts, who have made trades themselves already, will know that it just doesn't make sense to purchase stocks or ETFs with these kind of small amounts because the fees will just eat you up. You don't want to make a 35 ringgit trade when the fees cost you 5 ringgit. That is just way too much to pay. And 37.5 was just looking at it on an average. For example, in my portfolio, some of the ETFs that I've selected only have a 5% weightage, meaning on a monthly basis, I deposit 300 ringgit, they have a 5% weightage, meaning they get 15 ringgit deposited into the ETF every single month. There's just no way that I can use my own broker and purchase an ETF worth 15 ringgit and come out ahead. Another benefit of using this product is that StashAway will help us rebalance our portfolios. Let's say in your own investment portfolio, you've selected the S&P 500 and you put a target weightage of 10%. After a month, Let's say that the S&P 500 drops while everything else in your portfolio doesn't, meaning that the weightage of the S&P 500 within your portfolio is now 9% instead of the 10 that you initially allocated. StashAway helps us rebalance this by selling other assets and buying a bit more of S&P 500 so that we can get back up to our target weightage. Again, we can technically do this ourselves using the broker. I can easily just sell the shares that I have that are overweight and buy the ones that are underweight. But that takes quite a bit of effort and again, fees. Having said that, I don't think that this product is suitable for everyone. Like I said earlier on, if you don't really have experience managing your own portfolio, then it's probably better to start out with a pre-built portfolio from StashAway, have a look at how they allocate their funds, or even do some research on how to manage a portfolio. Aside from that though, in my opinion, if you have a large portfolio and make relatively large deposits on a constant basis, then StashAway's flexible portfolio may not be for you. Another scenario is that if you're not a fan of DCA, you prefer to just save up money and make lump sum investments in one go, then again, it's probably cheaper to just go ahead and do it with a broker. A final scenario where using flexible portfolios just doesn't really make sense is if you have a small number of assets in your portfolio. So let's say if you only have 2 to 3 ETFs selected, then again, it might be better just doing it on a broker. This is because the lower the number of ETFs or asset classes that you choose for your portfolio, the higher the dollar amount that goes into it every time you deposit. Basically, I would say that if you have at least 500 ringgit going into each and every one of your ETFs every single time you make a deposit, then going with a broker might just be cheaper than using StashAway's flexible portfolio. This is because StashAway also charges a management fee. It ranges from I think 0.5 to 0.8% annually on top of the standard ETF expense ratio, which brokers don't. So basically, if you're trying to compare the two, brokers will charge a transaction fee or a trade fee where you pay one time, whereas StashAway will charge an annual management fee. Most of the times, brokers will have a minimum amount in terms of their fees, which is why I said if you plan to make very small investments like most of us would do, then StashAway would be cheaper even though they charge that management fee. But if you invest a lot of money at a time, then paying that one-off fee might just make sense so that you don't have to pay constantly. Personally, I've chosen 8 different ETFs in my portfolio, which are all equities. I've essentially split this 50-50 geographic-wise, with 50% going to the US and 50% going to global stocks. Please don't follow my asset allocation blindly. This is just for reference purposes and so you guys know how it looks like in the app. But the reason I say this is that I'm making these decisions based on the other allocations in my other portfolios. So far, I've invested 1,000 ringgit into my flexible portfolio, but I'll also be transferring the values from my previous 3 thematic portfolios offered by StashAway. I'm gonna admit that looking back, investing into the thematic portfolios just wasn't the best choice. It's not really StashAway's fault, they just offered it as an option, and back then when they launched this product, ETFs like ARK were super popular. I just don't think we would ever get back to an environment like 2020 where growth stocks, were just mooning, people didn't care about valuations, and these kind of stocks really went up. Nowadays, I'm a lot more realistic. I've learned my lessons, so I've re-optimized my portfolio to sort of balance it out for the long run. Since I'll also be stopping my DCAs into the thematic portfolios, I've also shifted these amounts plus a bit more into my flexible portfolio. If you want to create your very own, all you have to do is open the app, click create a new portfolio. When you get onto the screen, you have to click customize a portfolio. Once you do that, you'll get the option to either start building a portfolio from a pre-built template or completely from scratch. I decided to create from scratch because I kind of already knew what I wanted in my portfolio, but for those of you who maybe don't have that much experience, you could always just start off from their pre-built portfolios and then just make adjustments based on what you want. Once you do that, you just gotta select the ETFs that you want, assign your allocations, deposit your money, and you'll be good to go. So, if you're someone who wants to build their own portfolio, DCA into it monthly, and can't afford to put a large amount every single month, then StashAway's Flexible Portfolio is actually a pretty great product. If you want to sign up for StashAway, use our link down below. It'll really support the channel. Thanks for watching this video to the end, guys. Give us a huge thumbs up and subscribe to our channel if you haven't already. See you guys in the next one. Peace out.